1 year ago, Baltimore was one of the nation's top performing apartment markets. But now, at the midpoint 2011, Baltimore is in the middle of the pack. What happened? Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Charm City update. Let's get started with some data, and this time with some old data. We set the MPF time machine back 1 year, and here at the midpoint 2010 were the nation's top 5 markets for annual revenue growth. And there you see El Paso, and of course if you're a longtime viewer of this program, you've heard us explain that one. Greenville, New York, Baltimore, and Fort Lauderdale. Baltimore, 4th nationally, annual revenue growth of 5.1%, ahead of even neighboring DC, which everyone was talking about at the time. Okay, now let's fast forward to modern day. Baltimore is not in the top 5, nor the top 10, the top 20, or even the top 30. We have to go to the top 40 to find Baltimore at the number 40 spot with revenue growth of 3.5% in the year ending June 2011. That is 1.1 points below the U.S. average. So that means the Charm City is one of the few spots where revenue growth has actually slowed down since June of 2010. So what happened? Well, it's interesting that we see a very clear correlation between the employment market and apartment demand. Let's look at some employment data. Baltimore was one of the first markets coming out of the recession. Back at the midpoint 2010, it was posting annual job growth of 3,000 jobs, and that was earlier than most markets saw growth. But then we saw that Baltimore just wasn't able to sustain it. Annual job change dipped into negative territory by December, and by June of 2011, Baltimore reported the loss of roughly 10,000 jobs over the past year. Now, let's look at how that's affected the apartment market. Take a look at this chart showing annual apartment demand by quarter. You see that demand peaked at the same point, June of 2010, 5,350 units absorbed at that time. And by June of 2011, 1 year later, annual apartment demand is now in negative territory, though just slightly, negative 330 units. And here's another illustration of that. Occupancy. You see it peaked at 96.1% in 2Q 2010, dropped to 94.9% by the end of 2010, and now it's up a bit from that point at 95.4%. Still solid, of course, no cause for alarm here. Occupancy still in pretty good shape, but not where it was. And rent growth. Year-over-year rent growth actually peaked in 1Q of 2011 at 5.3%, and now we're seeing the market normalizing a bit. Same-store rental rates climbed 4.2%. in the year ending June 2011. And here's one submarket for you to highlight the trend that we see going on in the metro overall, Columbia, Ellicott City. Top-tier submarkets have done well all across the country, and this is one of the top submarkets of 2010, but we've seen growth here slow down significantly. Back in 3Q of 2010, occupancy was close to 97%, and same-store rents had jumped 8.3% annually. But now, as of 2Q 2011, occupancy is at 95.1%, and rents are up 5.1%. Still very healthy, but no longer phenomenal. And that really captures the overall story for Baltimore. Still a very healthy market, but no longer a phenomenal one. And we've seen similar stories in places like DC and Raleigh, markets that were quick out of the gate coming out of the recession in 2010, but just haven't been able to sustain that level of revenue growth. Now, going forward for Baltimore and those other markets as well, we do remain optimistic, probably more of a bump in the road, maybe normalizing Baltimore's numbers a bit, as it was just a little bit too high maybe in what we saw in 2010. But going forward, we do remain optimistic for Baltimore's outlook. And that wraps us up for Baltimore. Until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with MPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.